Session. Roll call. Jacob Gray Mason, present. Joseph Devonzo.
Yeah.
John Corrigan.
Present.
All right. Everyone's here.
First order of business would be to review and approve the minutes from the February 21st meeting.
I move that we approve the minutes as presented.
I second.
Any discussion? Actually, if you could all sign one, and a vote.
Oh, vote.
Aye.
Aye. Yeah, let me see that one. I'll sign that one.
Joseph is not
Oh.
going to be rushed. We need to finish this vote.
All right.
Joseph, do you have a vote?
Aye.
There's a motion on the table to approve.
The
Minutes.
Yep.
Aye.
Perfect.
All right, the one in order, only order of business is an appeal hearing by Matthew Hamilton. Before we get underway, I just want to make sure that anybody that's going to testify, last 2 months ago, we had a full house. It seems a little more intimate. I assume you both will be testifying?
Yes,
Do you solemnly swear in this matter to tell the truth, the whole truth, and nothing but the truth?
I do.
Just like last time, in terms of the record of appeal, we have received the appeal application and supporting information from Mr. Hamilton. We've received some supporting information and response from the assessor Caitlin Eldridge. Those items will be included in the record on appeal. The other item that I received from Mr. Hamilton, as you know or might know, the board has a 60-day deadline within which it needs to issue a decision, 60 days from the date the application is filed. You will recall that we were in the midst of another appeal at that time. I thought it would be nice to give the board a little bit of a break. So when I started to reschedule, plus we had some scheduling difficulties when we got back up and running, got some dates, it appeared that the 60-day deadline was going to be beyond the date with which this board could act. And if that happens, the application is deemed to have been denied. So rather than to have that catastrophic result on Mr. Hamilton's application, I asked him to agree to an extension, which he is entitled and statute, the law authorizes him to do. So he's granted the board an extension to issue a decision until May 20th, which should not be a problem, but it allows this board to continue forward.
Okay.
Okay. We went through this last time. The jurisdictional question. Recall we have to first decide whether we have jurisdiction. There's a number of steps that the applicant has to go through in order for this board to have jurisdiction. Mostly time related, filing timely applications on time. I have gone through the process, and just to expedite things tonight, I've gone through the process, and he has checked every single box.
Okay.
So the appeal is timely. Assessor takes no issue with that finding that the appeal is timely. So I think we can skip the formalities unless anybody has any questions. But all the dates line up. Everything was filed on time.
Okay.
Again, before we get going, a reminder that the hearing, and new for you, a reminder that tonight's hearing is de novo, meaning the board is to make a decision based on the evidence that's presented this evening. You are not reviewing the assessor's decision, you are making your own decision. based on tonight's evidence. The burden of proof to demonstrate that the assessment is manifestly wrong is on Mr. Hamilton, as it is throughout the rest of the hearing. And there is a legal presumption that the assessment is correct. So that's the burden that Mr. Hamilton has to overcome. We talked that he has to first demonstrate that the valuation is manifestly wrong. You've cited that standard in your filing, so there's probably no need to go through it. I know the assessor understands it. Obviously, Mr. Hamilton understands it. So that's obviously where the evidence should be directed as to whether the valuation is manifestly wrong. And with that, that's kind of the preliminary stuff.
Perfect.
We'll turn it over to you and turn it over to Mr. Hamilton to.
Absolutely.
Wait, where did the signed one end up?
Oh, in my pile of paperwork.
I'll return that to the clerk, the town clerk for the records, town's records.
Oh, thank you.
Thank you.
All right. So thank everyone for coming tonight. I appreciate you all being here. As you know, my name's Matt. I'm here to appeal the abatement denial for my property at 113 Main Street. I'm requesting an abatement of $87,297 to decrease my assessed value from $305,430 to $218,133 in order for my property to be assessed at the same percentage of just value as other similar properties in Bucksport. Tonight I'll lay out my argument that the assessment is manifestly wrong because it substantially overvalued my property in relation to others, putting an unfair burden on myself. So to start, I compiled a list of 6 comparable properties, similar to how you would have an appraisal when you get like a mortgage or anything like that. I included the assessed value from the previous assessment cycle or from this past one, and the sale price, the most recent sale price, to completely eliminate any sort of subjectivity, so they're actual sales figures instead of trying to guess market value, and then we could be here all night arguing that. I don't think anybody wants that. So specifically, we're looking at the percentage that the assessment is of the sale value in order to completely eliminate any subjectivity. It's completely objective numbers. Specifically, we're going to look at the average of those properties, and when you do, you're going to find that it's clear that my property is assessed at a significantly higher percentage of just value than the other properties. So my property is 113 Main Street, and the 6 properties that I have selected are 143 Main Street, 44 Bridge Street, 17 McDonald Street, 13 McDonald Street, and 38 Mechanic Street. And obviously they're all in Bucksport. So when I did this analysis, I came to the conclusion that these 6 comparable properties were assessed at approximately 67.5% of their just value. That's the simple average. I did also the weighted average, which came to 67.4%. So I was pretty satisfied that it's a reliable average, considering both numbers came to the same. My property is assessed at 94.4% of its just value, which is significantly higher. So before we get too much further, the town is probably going to try to tell you that these properties are not comparable and imply that like this analysis is not valid, but a couple points to that is that it's completely irrelevant whether they're comparable or not. The law makes no distinction on whether a property has to be comparable in order for it to be assessed equally as a percentage of just value. So we can, even though I'm saying it's irrelevant, the next thing I was going to say is that they are comparable. So an argument that they're going to probably use is that my property is a multifamily property, and 4 of these properties identified are single-family properties, and that was being used as evidence that it wasn't comparable, but it's just not true. in my appraisal, we used 143 Main Street as the number one comparable property. So I think we can all be in agreement that if a licensed appraiser in the state thinks that it's comparable property, it's probably comparable property by that definition. So any argument that a single-family home doesn't meet the comparable requirement is just not valid. So that would include 143 Main Street, 44 Bridge Street, 17 McDonald Street, and 38 Mechanic Street. And additionally, 90 Route 1 was a 3-unit, so obviously if a single family can be comparable, a 3-unit is going to be comparable. And they'll also probably bring up that, which one was it? It's 13 McDonald Street has undergone upgrades since then, and the assessed value is going to be increased for the next assessment cycle. But I wasn't looking at the next assessment cycle, I was looking at the one that just happened. That's where the accurate snapshot of this percentage of just value is. So I think it's extremely relevant. If we don't want to use the word comparable, that's fine, doesn't matter to me. We can use relevant, we can use similar, doesn't matter. So now that we've got that out of the way, specifically the issue at hand is because my property is assessed at such a higher percentage of just value, it is actually a violation of the state constitution. So I will read an excerpt from Article 9, Section 8, which states that all properties or all taxes upon real and personal estate assessed by the authority of this state shall be apportioned and assessed equally according to the just value thereof. So I obviously take that to mean every property in a municipality needs to be assessed at the same percentage of just value. And just value here, it typically means market value, but that's obviously got a little bit of subjectivity to it, so that's why I specifically chose actual sales figures in my analysis. So there's no possibility of subjectivity. It's actual numbers that can't be argued against. But in like the same meaning of not wanting to be subjective, I have an excerpt from Maine Revenue Service. It's PT 101, Introduction to Property Tax, which is a course administered by the state to teach the assessing profession. They have a little excerpt in here that helps explain what that section from the Constitution means, so you don't have to just take my word for it. It goes as follows. This paragraph is interpreted to mean that all taxation must be fair. Just value is equal to the market value. Municipalities must assess property taxes according to the just value of property. The phrase according to does not mean that all property must be valued at market value, but all property must be valued at the same relation to market value. For example, if one property is assessed at 75% of market value, all property in that municipality must also be assessed at 75% of market value. So again, pretty similar to the definition that I gave, is that every property in a municipality needs to be assessed at the same percentage of market value. And according to Property Tax Bulletin number 10, a significant issue is something that, like an issue that is significant enough to warrant an assessment being wrong, is an excessive deviation from the average treatment of other properties. And I think, in my opinion, a 94.4% is a pretty significant deviation from 67.5%. But again, I don't want to use my opinion. I want to use something that is more in line with fact and harder to argue against. So specifically, Maine Revenue Services, Title 36, Section 848A, states that in any proceedings relating to a protested assessment, it is a sufficient defense of the assessment that is accurate within reasonable limits of practicality, except when a proven deviation of 10% or more from the relevant assessment ratio of the municipality or primary assessing area exists. So here the state is saying that they're putting the standard at 10% deviation is what they're considering is making it to the level of being inaccurate. And my property at 94.4% is a 40% deviation from the 67.5% average of the properties that I've selected. So I consider a 40% deviation when the standard is 10% to indisputably show that the property is substantially overestimated. And I also wanted to note that I do have 6 properties in my analysis. I would have liked to get more, but I could not find additional properties that were similar enough and sold within a recent enough time frame for the sale value to accurately, or at least closely accurately reflect the market value. And all these properties were sold between 2020 and 2022, so I understand that the market value is probably higher than the sale value. I'm willing to concede that difference in order to eliminate any subjectivity. But again, the deviation of 40% of my property from that average indisputably shows that the property is substantially overvalued. So, therefore, the assessment is manifestly wrong due to this overvaluation. It is unconstitutional. It places an unfair burden on myself. Therefore, in order to correct this injustice and return the assessment to a fair and legal standard, I am asking you to grant my abatement request. Thank you.
Did you guys have any questions for him before I begin?
I don't.
Not
Is
yet?
it-
Okay.
Anyone
yet.
else?
I don't have any, I mean, he followed what he submitted.
Okay.
Do
Then
you
I-
have any, you are also entitled to cross-examine, if you will. Do
No,
you have
I'm
any
all set
questions?
with the documentation that I have ready to show you guys.
Okay.
So just my first document is that initial letter that I had sent out, to you folks. In it, I outlined some of the issues that he had highlighted before, and he's correct in, as we had discussed previously, appraisal is different from assessment. So what an appraiser might consider to be a comparable sale is not what would be considered a comparable sale for assessing purposes. I can assume that if you have a single family home, you wouldn't want it to be assessed at the same way that a multi-unit four-unit building would be for your taxing purposes. So that's in there. I know that we had previously discussed how the town of Bucksport went about our cost schedule update. So there are some municipalities throughout the state, when these sales started booming, that when we fell below our certified ratios, they put a blanket percentage across all properties in town, whether it was a 1-family or a 2-family or a 7-family. We were fortunate enough that in Bucksport we had a townwide revaluation that was performed and released in 2019. So we had what was considered good data. So we were able to actually hire someone to come in and update our cost schedules based on the data that we have and the current real estate market. So each property saw a change in their valuation based on that property rather than a blanket percentage. So if a property saw 68% increase and one saw a 94% increase, that was based on that exact property and how they were selling on the market. So if a 4-unit was, more popular for folks at that time, then that was something that would be at a higher level than a single family would. So it would be hard to use that in a comparable way for assessing purposes. And then I stated that our cost schedules, like I said, were based on the current real estate market, which is determined between a willing buyer and a willing seller and spending time on the market. So there's no, it's not a foreclosed property, it didn't catch on fire and was dilapidated or anything like that. It was a fair market sale is what it's called. And that's what we use when we have our certified ratio performed by the state of Maine's audit every year. And per the state of Maine, one of his examples was at the state of Maine's 10% rule. That 10% rule is to be within 100% of fair market value, not within 10% of every other property in town. So, for example, if I'm audited by the state of Maine and it shows that I'm coming in across the board at 90% of fair market value, I can say that I'm assessing at 100% of fair market value. If I'm coming in at 80%, I can say that I'm assessing at 88% of fair market value. So that's where that 10% comes in. It's not 10% to your neighbor's duplex compared to your single family home. Those fair market sales, like I stated, are what I'm audited on every year. So for example, next year, Mr. Hamilton's sale in my audit will be part of that certified ratio number. And as it stands today, I would only be considered assessing him at 94% of his fair market value, whereas the town as a whole right now is considered to be 100%. So as of my audit last year, I'm considered to be at 100% of fair market value across the board in Bucksport. So that was my initial letter that I had sent out to you folks. One of the other arguments was that Mr. Hamilton had no indication that this was coming. While we don't tax based on if folks know that an increase is coming, I did provide just a little update in here of when the cost schedule update started, and that process actually started in January 2022. The first conversations with the contractor were had then. My first big presentation was quite a long one to the town council, was in May 2022 about the discrepancies between fair market value and our current assessments. Work began on the project in December of 2022 by myself, April 2023 by the contractor. Those numbers were provided by the contractor in July 2023 and went live in our software, which was well before Mr. Hamilton purchased the property. So if anybody had reached out and asked for a property card, an estimated tax bill for the upcoming cycle, that would have been available. July 31st, we paid the contractor. He was done with his job. So that was before we committed taxes. August 28th, tax bills were mailed out. So that all happened. And then, as I had previously stated, we assess based on what exists as of April 1st each year. So the previous owners owned the property as of April 1st, so they received their tax bill that was mailed out on August 28th with the updated amount and the updated taxes that were due. At that time, a prepayment had been made for the time of closing on that account. So whatever they had agreed upon at the time of closing, whether it was a past tax bill that they used or a number they pulled out of air that they decided was sufficient, that was paid by Truergy and Baldacci on August 7th after they had signed the paperwork to close on the property and they had agreed on that amount of taxes that were due. So that tax bill that was mailed was the initial amount less that prepayment. And that again was sent out August 28th. And then the commitment book I just stuck in here. It shows the date that we committed taxes, which was August 28th. Shows the amount that we committed at. So there was no late payment or no after the fact tax that was submitted, which was in Mr. Hamilton's initial request to me for abatement, was that he had been taxed after the fact. It's just not true. This shows that we committed. I can't reprint a commitment book. I can't reprint a tax bill. It is what it is, and it stands in the law that way. So then we come to comparable 4-unit properties that were sold in the town of Bucksport between April 1st, 2021 and September 2023. This is Mr. Hamilton's property. He purchased it August 4th, 2023. It's assessed as average condition and average quality of construction. No frills, no bells and whistles, average. He purchased it for $323,640. I have it assessed for $305,430. This is a property very close in location. It's 69 Franklin Street. I'm sure most of you drive by it very regularly. It's on the corner of Franklin and Central. It is not inhabitable at all. Not habitable.
Not happening.
Not
Yeah.
habitable.
Oh yeah, sorry.
Can't live in it.
Not uninhabitable. It's not habitable. I have been in this recently. It's still bare bones. It's gutted. This was purchased at $85,000. It's currently assessed at $99,000. This is also a 4-unit. In very close proximity. These are photos of it. I don't have interior photos of Mr. Hamilton's, unfortunately. This is the inside of this property. And then 5 Buck Street was sold December 2022. It is a 4-unit with currently only 2 units can be lived in and 2 units cannot. And at the time, it was being lived in by an elderly woman who lived in one and did nothing with the others. And it was sold as an estate sale at the time of her death. So unfortunately, that's not one that would be included in my sales analysis by the state of Maine because it's not considered a fair market sale. That one was sold for $95,000 and it is assessed for $213,360 currently. And this is the inside. You can see some units are fine and some units are clearly not able to be lived in. 333 Central Street sold March 2023, so this is the closest time-wise sale. This property was sold as they had started the construction on the project and it wasn't finished at the time of sale. So at the time, it was sold incomplete at $194,000, and I had it assessed last year for $249,020. And then the new assessment for this coming year, it's all complete. The code enforcement officer and I have done inspections on all of the units. The new assessment for this coming year as a fully functioning 4-unit property is $429,480. And then the last property that I have was sold is 40 Ledgewood, so that's further out. It's closer to the Orrington town line. Sold in May of 2022. There were no interior photos available for this. So I had to use the information that was provided to me by the previous assessor's revaluation in 2019. So that sold for $250,000 and is assessed for $304,270. And those were all sales within the time frame that Mr. Hamilton had given you folks earlier as well. So then we get down to the timeline of the property transfer and Mr. Hamilton's abatement requests. August 4th, 2023, Mr. Hamilton purchased the property for $323,000. I have the deed and the transfer document if you folks would like to see that. I also have a copy of his mortgage, which was for $258,912. So that's less the 20% down payment that's needed for a home. Which, if we've all purchased a property, we know that you need an appraisal for a bank to give you that kind of money. And banks aren't going to give you money if you don't have an appraisal supporting that that's the value of the property. Like I said before, August 7th, there was a tax prepayment sent to the town from Triwergi and Baldacci, who was the closing agency. So that was the agreed upon amount that was sent to the town. Again, nobody had reached out to me asking for a property update or an updated bill or anything like that, even though the town of Bucksport historically commits taxes as close to July 1 as possible. August 28th, tax bills were mailed out. November 2023, I don't have an exact day because I don't do this portion. A friendly reminder notice was mailed out for overdue taxes by our deputy tax collector. It's just something that you get in the mail that says, hey, tickler, before things go south, you do still owe us taxes. And then December 15th, Mr. Hamilton filed his initial application for property tax abatement, and his initial request was for $137,490 abatement. And I denied that, and I have a copy of the letter for that as well, if you folks would like to see that. And then on February 20th, he filed an appeal to come see you folks with an abatement request of $87,297. And that is what I have for you today.
Okay.
Do you have any questions with all of that information?
I have no questions.
You've answered mine pretty well with your presentation.
I just want to ask everybody involved, wouldn't you expect, if you're going to pay more than the market value of a house, to have the taxes go up?
I didn't pay more than, I don't understand the question, sorry.
Well, you did pay and 5,000, how much did you pay for that?
I was 323,640. The assessment was 305,
And-
430, right?
Right, so, and you also knew that the old assessed value, since it hadn't been assessed in years, was 140, so you had to know that the taxes then were based on 140, not on the 300 and change. So
Right,
They
yeah.
would have to go up.
Right, yeah,
All right.
exactly.
And if I'm right, the taxes were $2,385, around that at the time?
I'm not sure.
All right, that's what I had on from the internet that I looked up. Yet, houses I looked up, even in my own area, right here on Bagley, where it's a single-family home, and the square footage is 1,568 square feet as opposed to 4,380. They're paying 2106, and over there it was 2385. So you have to realize then that that property is going to be, now that it's sold, is going to be placed in a position to be of value for 300 and, as opposed to
Right, I
140
understand.
as
I was
opposed to a
expecting
single
the
family home.
taxes to go up, but what you're missing the point of just, it's being assessed at a significantly higher percentage of fair market value than other properties. I knew that the assessment was gonna go up. Of course, like, everybody knew that during COVID it was gonna go up. Average house prices went up about 50% throughout the time frame from the
But
previous assessment.
what's
Mine
that-
went up 117%.
But what that means, and what you're leaving out, it went up because it was previously undervalued. You can't say the average value, meaning that all houses are being valued justly. That house was undervalued by an awful lot compared to the market, which is why, comparatively speaking, it had to be raised in order to bring it in line with the actual. You can't just take all of the houses together and then say, there's 2,000 houses, here's the average value. No, because some houses are 99,000, some houses are a lot more. The one if you want to, up on Forest Hills, they're paying, I don't want to, the address, 6,000 and change, and their square footage is 2,900. So if you're going to make an adjustment, if you're gonna say value your house to that on square footage, and your house that house on Main Street is a 4-apartment house, as opposed to a single-family house with 4 different units, 4 different bathrooms, 4 different kitchens. I don't see that taking just a value of the amount of houses in Maine and the average value, you have to at least take the house in comparison to the other houses in order to put it within the scale.
Yep,
of the
that's,
total
that's
avail.
exactly what I did
You
in
know?
my analysis. Unfortunately, the ones here were not. Most of those were non-habitable, as we just saw, so not relevant.
But 4 units.
Well,
Again,
And
the
a
market doesn't make a distinction on that. My appraiser,
They do, because if you compared this to your house today and on a market analysis, they would say that this is not worth as much as your house is.
well, yeah, with
Just
the
to-
condition of it.
for- just
Correct,
to-
so that's how,
I'm just arguing
that's how
it's
mass,
not the
that's how mass
assessment
appraisal
itself,
works.
It's the percentage of the assessment to the market value.
if I just want to, since it was my turn to talk. You gave the house on Mechanic Street, 38 Mechanic Street as an example. It's 2,450 square feet and their taxes were 3,631. Your 4,380 square feet and those taxes were 2,385. Which is why you had to jump up a lot in order to put things into context.
Right, I understand, but like, I respectfully, I think you're missing the point, is that the assessment needs to be equal among all of the properties in terms of its just value. So you can't just say, like, if you were all to buy $100,000 properties, yours was assessed at 50,000, yours was assessed at 50,000, yours was assessed at 99,000. It's doesn't work. Like, if you have two
Why did
assessed
you
at
pay
50%,
$330,000 for for a house that was listed at 140 adjustment value?
Oh, bad deal.
So I think the way that the law is being interpreted by Mr. Hamilton is, it's not the way that the courts see it. What it means to be within the same percentage, it means that when I'm audited by the state of Maine, that if I have properties that they're saying that if I'm coming in at if I'm coming in at 100% of fair market value, and then your property is assessed at 120% of fair market value, that's unjust. But just because the percentage of increase on these properties is different than what it is, a different percentage than what it was from the year prior, doesn't make it not fair market.
So,
It just means that it needed a different level of adjustment to get it to fair market.
so part of the process is to bring the value being assessed has the element of currency. That's the secretary's point.
Correct.
And the element of currency is determined by market.
Yes.
Okay, so these are all kind of not concrete numbers.
Right.
And you're stuck with what assessment values are appropriate by state mandate.
Yes, so the
And-
state mandates that we be as close to 100% certified ratio every year as
Yeah.
possible.
And, you know, I'm not an expert on real estate, believe me. I'm barely an expert on anything, really. The kicker is that the base from which you predicate your assessment of justness has got to be current.
Correct.
That's the ball game. That's
Right.
what you're saying.
That's what I'm saying, is they're readjusting to make
Well,
things current.
why wouldn't they?
Right.
Right.
I mean,
That's
why go through
exactly.
this whole thing? So, as I've understood the documents that have been presented to me and the arguments that I've heard so far, the essence of the argument that Mr. Hamilton is saying is currency is irrelevant.
I can't speak for Mr. Hamilton's
No,
argument.
no, but I'm saying, my position is to hear and to help make a judgment between these folks. And currency is really the only thing that is being argued about here. Oh, well, the major element of being argued here. And I'm hearing currency has been maintained in the assessment process.
Yes, my valuations for the current assessment year that we're talking about were determined by the state of Maine to fall within the correct percentage.
Right, and the percentage, and, you know, those are the parameters that, you know, people can hang their hat on.
Right.
My argument is currency, and currency is an action over time.
Yep.
And, the upkeep of property, the utilization of the property, all that comes into currency. And I'm hearing from you and the documents I have before me that currency has been maintained and justness is right there on the documents you've given us. In terms of the base of the properties being looked at by Mr. Hamilton and used as his basis of argument, I don't buy that in the least. I see that the currency was an element of purchasing the property, bringing its value within, you know, the 21st century, and adjudicating fairness and justness, right, based on how you do your whole thing for the entire town of Bucksport. I don't see you've done things different. I see Mr. Hamilton making a choice of his choosing as to the properties that are the base for which he thinks currency is based on. But I don't buy that in the least. And I rest my case on the nebulous word currency.
Anything else from either of you gentlemen?
Well,
If,
I'm looking at the clock.
All right, Mr. Hamilton, do you have anything that you would like to add that you have not gone over?
Yeah, I mean, I think it's pretty clear that, it's obviously a violation of the Constitution. I mean, I read it right here from a state document. Every property in the municipality needs to be assessed at the same percentage of market value. I know that you guys haven't been buying my comparative properties. That's fine. I had the question of why would a single-family home versus a multifamily home be viewed differently in the eyes of assessment compared to appraisal when the assessment is supposed to be based off of real market conditions? So I don't understand what that distinction is. Why would that make a difference? I know she brought up the 100% assessment ratio, but in my understanding, that just meant that the taxable value of the assessment is 100%. It has nothing to do with the market value versus the assessed value.
So my certified ratio is determined each year by the state of Maine. I get a spreadsheet of all of the sales that have occurred in town and what they sold for, separated by the type of property, vacant land, developed land, rural land, urban land, and then I have to enter in exactly what I have it assessed for, and then that percentage is considered my certified ratio. So it's a direct comparison between assessment and fair market value.
I have a question.
I just wanted, the assessor is exactly right. I think the confusion, a little bit of the confusion is that it is the certified assessment ratio calculated by the state, published by the state. This is 2022's.
Yep.
The town was 95% here. They're 100% now, I understand.
Yeah.
And it is a defense that if you're within that,
Well, you're in the ballgame.
right,
You're not being unjust.
right.
May I?
Yeah, absolutely.
So the question I have for you is I come up with the word contractor, which is an element of the process.
Yes.
Okay. Has the contractor been used before in Bucksport?
No. The contractor that we used, his name is Bill Van Tynen.
The what?
Bill Van Tynen.
Okay.
He has been an assessor probably for longer than I have been alive. And he has done this for
But-
hundreds of communities.
But this is his business.
This is
not,
yes.
This is not a newbie on the scene.
No, and he's
Okay.
not has no skin in the game in terms of Bucksport. He doesn't even
Okay.
live in the same county.
Okay.
He's very, very good at what he does, and he's very, very well
Okay,
respected.
so the contractor's judgment process is critical to value
Yes.
and currency, and he's a trusted member of the contractor community because of his, I guess,
He's a certified state of Maine assessor as
Okay.
well. He also teaches courses. He does anything and everything that has to do with assessing.
Bill Van Tynen is the godfather of assessing in the
Yes.
state of Maine.
we're not giving it to God.
We're not worthy.
No.
But the point is that the contractor is an element of determining justness, and that's what we're here for.
Correct.
We're trying to figure out what is the
He
just.
was used to help develop the cost schedules to update all of the
Right.
property values to
Right.
be in line with the current real estate
And he's not a relative of yours,
No.
he's a business person, and this is what a reasonable person in your position would choose, an experienced contractor.
Correct.
Okay, thank you.
Okay. Either one of you guys have anything else you would like to add?
Not unless you have any other questions for me.
I don't do either of you gentlemen.
I made a list of maybe 50 houses that sold in Bucksport in the last 3 years. I was looking to see what their taxes were compared to their square footage, and according to my opinion, what I was looked at, the property 113 on Main Street was really under assessed
Yeah.
and under taxed compared to other houses that were being taxed, which were one family, and a third of the space, and the taxes were like $100 less. It is, and that's because the property on 113 Main had never been re-evaluated because it had never been sold, and now it's a shock because of the market condition. It seems you were, and this may be off cue, but seem to be upset about the renter in your discourse about why there can't be any rental properties at a certain for the low-income people. It's not geared toward any spite or anything personal. It's just putting a house in line with everything else that is going on within the area. And like I said, just up the block from that, on Bagley, the house, is paying 2106, and it's 1,500 square feet. It was just sold, so that's gonna go up again. So I don't see how that could be more taxed at a higher rate than a 4-unit apartment.
Well, I'm not looking at the amount of taxes that are owed by a property compared to how big it is. I'm looking at the percentage that the assessment is, like as a percentage of its market value. And I don't understand why we would make what is the distinction between single family or multifamily in that perspective? Why couldn't it just be considered a bigger house? Like, I don't understand. And because it's just a bigger house, it should still be the same percentage of market value. The assessment should still be the same percentage of market value. It's pretty clear in the Constitution.
But you also weren't looking at the previous value of the house of 140,000 to the 300 and something.
No,
It's
sir.
quite a different jump.
No, have you seen the
It's-
analysis that I did?
Okay.
I showed they were the most recent sale prices and then with the most recent assessments. Average value there is 67.5%, mine's at 94%. It's a 40% deviation. That's extremely excessive. And these properties, like I said, I wanted to do more, but I was trying to find as similar properties as possible. So I wanted them in the same price range, so I wasn't using properties like this as comparable properties. They're not inhabitable, they're fixer-uppers, they are not comparable. You can't use them in terms of, this why the appraiser for my mortgage didn't use those properties. They used properties that were actually comparable. There's obviously, you're limited to a certain amount being in Bucksport. They had a few that weren't in Bucksport, and those are not relevant to us tonight. But these were as close as I could get to similar properties. And we're just specifically looking at the percentage that the assessment is of the market value. And market value, I specifically chose as the actual sales figure, so there is no subjectivity at all to that. And I'm willing to concede that the market value has gone up, but I'm willing to concede that difference to specifically stay at the sales price, the objective sales price. Nothing has changed since then, except the actual value would have gone up, meaning the ratio that I'm claiming would actually be lower, but I'm willing to concede that to be completely objective. And again, we come to the same issue of, just because it's a multifamily, why does that change the value compared to it just being a bigger house? What is the specific reason having more units makes it more valuable?
If I
Well-
put a second bathroom in my house, my property taxes go up.
Correct.
I put
Yep.
a small deck in the back of my property, it's an
Yep.
added value.
Well, it's
Yeah.
because your value increases, right? But there's no way to objectively determine that value increase until it's sold.
Well, if I may,
And that's not true.
no, I
Just
don't
letting you
believe,
know that.
I don't
Well, I
believe
mean,
that.
you could
either.
get an appraisal done,
I
of
can't,
course,
I'm not arguing, I'm just letting you
but
know.
it would be subjective.
But one of the elements of justness is the utilization of the property in question,
Right,
as it relates to the community in which the property is located. And from my perspective, if you've got a multi-unit property that's capable of housing multiple families, that has more utility and a revenue stream that supports a higher tax.
but I don't know if you're done, can I interrupt, or do you want to?
You can interrupt me
Well,
anytime you want.
I don't want to be rude. I'm really glad you brought that up, is that it has a revenue stream, because my appraisal was done using the cost approach, not the income approach. So the income from the house has absolutely no basis whatsoever on the assessed value. It has to be done by the cost approach.
How is your appraisal done on single-family homes using the income approach versus the cost approach?
Mm.
I don't know.
Because the direct comparable for an income approach is the cap rate, which the cap rate directly relates to the number of units in the building
Right,
and
but it
the
wasn't-
income that's being charged. So if your appraisal was done on the income approach,
It
then
wasn't though. It was used on the cost approach.
okay, so this is also done on the cost approach.
What is?
All of these properties that I've presented are also done on the cost approach.
Right, but I'm just saying like.
Cost
using the-
or market approach?
Same.
Cost
Same,
and
same.
market, same thing.
Okay.
I was just saying that like, using the argument that it has a revenue stream to justify a higher assessment is not correct.
And
Well-
that's not how your property is assessed in the town
Yeah,
of Bucksport.
but I am giving you my opinion, and I'm an expert in real estate. But I do know that if the utility of the property in question is improved by virtue of its ability to support a tax of a higher level, to me, that makes sense. And maybe it doesn't make sense to you or even to the state, but that's my opinion.
I appreciate that, but I mean, what makes sense isn't necessarily what the law says. I've come to conclude that through this whole process. Yeah, so,
So,
Am I allowed to ask a question, Roger?
I vote that he is,
Yeah.
yeah.
I'll come up with Microsoft so the public can hear me understand. So I'm Luke Cavelli, Code Enforcement Officer, and not really weighing in on this one way or the other, but I have one comment and one question that I think might help clear some things up. The comment is, from a code perspective, a single-family dwelling or a duplex are under the residential code. Once you get into a third dwelling unit, it becomes a commercial building, which is a completely different code, completely different standards, and it's gonna be a different type of tax. But what I wanted to ask for a question, which I think this might clear some stuff up. I could be wrong, but you use the value of what he bought the house for. In no way does that calculate into what his tax bill is.
No. So the state of Maine we do what's called mass appraisal. If you bought your house in Florida and you paid $323,000 for it, that's what you're getting taxed on, regardless, no matter what. The state of Maine does mass appraisal. So in that certified ratio process, you use those numbers to help determine the cost schedule, which is what we had redeveloped last year, to determine the average cost of an additional bathroom, the average cost per square foot of a deck, that kind of stuff.
So the average person watching, and maybe you, I don't know, because I know I didn't know until you told me how it worked, doesn't know what a cost schedule is.
Right.
Can you, do you know?
not specific.
Can
I
you
don't know how
explain
it's
what a
determined.
cost schedule is and how that breaks the tax down?
Yes. So
I think that'll help.
every structure on a property, whether it's a deck, a shed, the principal structure, an addition, anything, is the biggest part of that is square footage. And then you break it down by how much on average it seems as though a deck is adding for value to a property's sale. So if you sold your house and it was exactly the same as yours, but you had a deck and he didn't, and yours sold for $20,000 more, the fair assumption would be in mass appraisal that your deck is what added all that additional value. When you break those down, and then you can break it down by square footage, it helps to determine the cost schedules, and that's all done on mass appraisal on sales that have happened in the community over the past year.
So you
No
literally
town.
plug in, this house has this much square footage, these many windows, this many toilets, this many, what, and the land is this kind of land versus
Yes.
farmland versus swampland versus whatever.
And everybody's
that's-
taxed the
computer
exact
spits out a
same.
number.
So if you have a ranch and you have a ranch, those are automatically going to be under the same cost schedule based on square footage. Now say you have beautiful hardwood floors and granite countertops and you have tiled all of the walls and you just think that those high-end fixtures are wonderful, and you have laminate floors and laminate countertops and regular sheetrock and you're very happy with it. His house would be worth more because the finishings on his property are worth more. So the base square footage and the type of property and all of that set the base value. So, for example, when I said that Mr. Hamilton's property is assessed at average condition and average quality of construction, that's considering that he has laminate floors, laminate countertops, no bells, no whistles, all of that kind of stuff. He has an average property.
But multifamily is a category, just like ranch is a category.
Right,
Is that
so, and then it changes based on that. So in our cost schedules, we have 4+ unit buildings, we have 3+ unit buildings, we have two family, single family, and we have mobile homes, we have double wides, we have every type of property that you can get. Because in the real estate market, if you're purchasing a mobile home, it's not gonna be the same as if you purchase a 4-unit property. And all those cost schedules were updated based on how things were selling on the real estate market.
So I guess my point was that the computer spit out the number of 305,000. It wasn't based on what he paid,
Right.
whether it was 140 before or whether it was 323 now. The
Which,
computer says, this is what this house is worth.
which, if you want to talk about the cost schedules, they did a very good job of being within 10% of fair market value based on the number that Mr. Hamilton decided was fair market value for his property, which is the state statute.
Okay. Any other questions from you two?
Nope, none for me.
Anything else that either one of you guys would like to present?
Yeah, I'll just have like one concluding statement here. So, you know, we've all brought up a lot of good things tonight, but I think, I mean, it's pretty clear that the law is clear, the Constitution is clear. Every property, doesn't matter what type of property is, in a municipality, needs to be assessed at the same percentage of market value. If it's not, it's a violation of the state constitution. I've obviously proven that my property is significantly higher than other properties, therefore violating the Constitution. It's an excessive deviation from the treatment of other properties. That indisputably shows my property is substantially overestimated. So, the only way that this assessment could be considered fair at this point is disregard for the Constitution. And the only way to correct that is to accept my abatement request.
Thank you. Any questions based off of that?
No.
Anything further? Okay, we will deliberate.
Close the meeting,
Close
close
the
the public
meeting.
hearing portion,
Yes, close the public hearing.
begin
portion
deliberations.
And begin deliberations.
As we did last time, I think it's always helpful to start with a motion, whether it's in the